Cole, in particular, you look at the big bulge bracket banks, you're looking at JP Morgan and Wells Fargo, Bank of America. The fact that JP Morgan's able to buy back $29.4 billion worth and up their dividend, sort of flying colours, therefore, in terms of the strength of the banking system here?
Well, and also the overcapitalization of the banks as it stands. In other words, the oddity of the bank stress test is we're kind of asking the same economy question that we've been asking a myriad of times the last 10 years. We've had this big flight to quality in the month of May, and I saw the $3 trillion in money market funds, first time we've had that in 10 years. So you're getting kind of stress-like scenarios in the market, and here's the Fed allowing massive buybacks. I mean,
well, speaking of massive buybacks, we have the news out from JP Morgan. I just had it on my screen that they're going to be buying back up to $29.4 billion worth of stock. They're also boosting their dividend. For bank investors, however, how important is this aspect of the equation? Because there's a lot of things that go into the growth and the yield curve and all that deal activity. So capital usage specifically, how much does that drive decisions?
Well, I mean, think back when they originally started to release capital. It was allowed through not dividends because the Fed's been very tight on dividends, but been primarily in the buyback world. What a blessing. I mean, think of how much stock has got bought back at lower prices. Let's not forget when, Bank of America, as an example, we were talking about breaking $5 and becoming a penny stock in early 2012. Stock's nowhere near that, but their buybacks in 12 and 13 and those places really were accretive to the shareholders. So it's been kind of a real blessing that the Fed has said, don't use income, use your stock in the open market as a way to distribute capital.
Do you think these tests are still relevant as they're constructed right now?
I mean, we're going to, to your point, Romaine, we're going to slowly get to the point where, people are going to be doing stupid stuff at some point, and the tests aren't going to be as meaningful in the future. Right. But I think, like I said, the economy is the real question for these guys as it pertains to their leverage.
Yeah, I was literally just going to ask, in your view, what drives the sector going forward? Because we spend a lot of time talking about the yield curve and interest rates. But is it more about just sort of what happens in the real economy more than what happens in some numbers on the screen?
No question about it. And it's ironic because the Fed is sitting here talking about what the market's forecasting in, and at the same time, they're saying, well, the economy's strong and the labor market's strong, and but we're afraid of what the market's showing us, ultimately. Usually Fed dictates market policy. Market policy is dictating the Fed in the interim.